Well, we have a focus on quick commerce coming up now. Swiggy's 10,000 crore rupee QIP has been subscribed 4.5 times. Well, let's talk about this. And of course, the debut for Meesho as well. Jignanshu Gore is Director and Senior Research Analyst at Bernstein. Jignanshu, good morning. Good to have you here. Prashant, this side. Good demand for Swiggy's fundraise. And now everybody's sitting on pretty much like a war chest. The question is, should we call it a war chest or just a chest? Because will they be spending to... Swiggy, for example, has lost a fair bit of market share. Will they try and get it back? So which means aggressive pricing, discounting, and so on and so forth as we head into 26.
Thank you for having me, Prashant. Always a pleasure. I think it is a war chest. There is a war brewing, which is why Swiggy was very keen to do the QIP. There is a secondary objective as well, which is to try and raise the money from domestic funds and become an Indian-owned and controlled company. However, the primary objective is to ensure that you can go toe-to-toe with Blinkit, who is already sitting on close to 18,000 crores of cash, whereas you had around 7,000 after the stake sale in Rapido. So between the two of them, now you have 35,000 crores of cash. Bonanza for customers, but largely in terms of discounts. I feel that effort will continue, and growth still remains the primary driver for quick commerce at least. So that's the primary objective for Swiggy and Blinkit. On market share, yes, they have lost market share. They will attempt to add more stores and gain it back.
Got that. Jignanshu, just a couple of days back, Albinder Dhinsa warned that India's quick commerce bubble could be close to bursting as the capital-intensive model's relentless fundraising will hit some limits. And he also said that a correction, whether it takes months or weeks, could come swiftly. You want to comment on this?
See, we are, when we analyze the quick commerce market, we think the potential is huge. But of course, there is not space for 6 or 7 large players in the market. So there will have to be some consolidation or concentration of market share. Today, of course, Blinkit remains the leader, and it is up to them to set the narrative, whether the idea or the metrics for the growth of the industry should be growth or profitability. And I believe right now they are shifting the narrative back again to profitability. We have seen it seesawing over the last 3 years. So I think the year of 26 might be, you have a war chest, but show me you can be profitable.
So Eternal is a core holding, I think, for most investors. But you said, right, Swiggy is now armed with a lot of money, matching that of Zomato, and it will try and regain lost market share. So if you want to increase your exposure to the quick commerce space, what is the advice to investors? Who is best placed now? And Zepto too soon will be coming out with its IPO.
Yes. See, I think it's a very interesting situation today because Blinkit is by and far the leader in terms of size, in terms of unit volumes, in terms of profitability metrics, as well as the growth rate that they're showing. So that is a clear winner. In our view, we expect them to remain the winner in the quick commerce space and the leader in the space for the next 3 to 4 years. So if you want to back a winner, our advice to investors for longer term, it has always been that Eternal is the natural winner for quick commerce space. Where we think Swiggy QIP also helps is, given the pressure on cash and competition from Zepto, the valuation on an SOTP basis of Swiggy's quick commerce business we thought was undervalued, which is why we advised investors to play that upcycle for Swiggy.
Jignanshu, Najal, you have a question on quick commerce? Because I was changing track to Meesho.
Yeah. No.
Jignanshu, any thoughts? Meesho, the big listing.
Prashant, we don't cover Meesho formally. However, from a broader consumer lens, I believe we've always said that the objective of retail is to transport one item from one place to the other. And hence, building a low-cost logistics network gives you a good right to win. Some of the other stocks that we cover and we like them are precisely for that reason. So right market in our view, but tough to comment on the stock itself given we don't cover it.
Any others you've initiated coverage on? Lenskart, some of the recent listings, Lenskart, etc.?
Not yet, Prashant. Very soon.
Very soon. So in the works. writing as we speak. Okay, got that. So top pick remains Eternal across your coverage universe.
Yes, I would. I think as of now, especially given the correction that
But-
Eternal has also seen.
But you'd imagine, because as you said, began by saying there's a war brewing, it's possible you get better prices into 26 to buy Eternal.
Yes, I think the landscape, competitive landscape today versus 12 months later will be very different. So there will be ups and downs. You might get a better price on Eternal depending on what happens with the rest of the competition.
Jignanshu, we'll leave the conversation here. We've got